most people nowadays.
Welcome. We are back. Another day in the market. First day of the week. Another volatile day. Fortunately, we closed down 2.5% on the Nasdaq, down 4% on the ARK ETF, down 3% on the Russell 2000, almost down 2% on the S&P 500, with the VIX up 19%. The US 10-year up 0.8%, which is currently at 1.89. So it's crazy. It's been crazy. I mean, there have been some needles in the haystack. You had Activision up 26% today on a major on some major news with the acquisition from Microsoft. You had SOFI shooting up after hours on a bank charter approval or something, and BBIG ran after hours. It was up 28% just during market hours alone. So yeah, let's get into everything. We're going to start off with Bitcoin, which didn't really change since last night. It's around the same price. The swing is still up about 1% since the entry. But you did print this nice bullish pin bar candle over here on the daily. And you broke out of a supply line on the 4-hour. So yeah, maybe this is your first low, second low. Maybe you actually reverse here. But you're still bouncing above this inflection zone. So things still look really good for Bitcoin, in my opinion, right here. So yeah, Bitcoin looking good to me still. Ethereum pulled back a bit after bouncing at the PCZ of a bullish bat. Again, same thing here. You might have your first low and then a potential second low. We'll see what happens. Moving on, FTM coin. We talked about that bearish engulfing candle yesterday and ended up selling off another 9%. Now it's bounced back up. Potential classic bearish divergence on this. It's still in the middle of a range. And then OMI is going crazy. So OMI, we're going to include the last hour and a half of price action. Is up about 12% on the day. It's testing the highs from October and November. If this breaks, if you get over 0.0084, then you're entering an area with very, very little resistance, where historically all you've done is straight up, straight down, straight up, straight down. So it already broke out. It's been amazing. We talked about it for the last 2-3 months down at these levels over here. And you broke out. We talked about the bump and run breakout on OMI. And now it is moving. Okay. So we're witnessing something that we've waited months for on this one. So far, so good. I mean, even look how beautiful this little triangle was over here on lower time frames. So really, really good price action over here. Hopefully it'll keep going. We'll see what happens. But remember, off the 200-day moving average bounce, it's already up about over 60%. So what's up, Jeff? What's up, KTF? What's up, IMEI Repair? Plebere, the waffle maker. Meg says, Champ, thanks for sharing your options on Twitter. Made 2% on the account today. Day trading your call on SPY. Good job. I mean, the SPY calls, the timing was off, and then like it was kind of, it was weird. So I think we could take a look at it really quickly, and I'll actually talk about the overall market. But what time did I share those? 11:15. So I shared some SPY calls pretty much right over here. Okay, so it was on this candle right there where I just put the white circle. Unfortunately, it had this little dip first and then it went up over here. So the calls I had to mark red on the sheet on this dip, and then they were up in profit over here, and then they were down for like half the day, and then they went back up in profit over here, and then went back down. So they were kind of all over the place. But yeah, if you were day trading them, you probably could have found some nice trades with them. But even apart from the SPY options, we had a very good start to the week for options in general. Skip that song. So for non-premium options, the SPY options, they failed, but they went back in profit. Then we had Activision calls, which I shared with all of you in the Discord. That was a beautiful trade, 50% profit. And I'm not even going to say potential return. That was the return on the calls, because I very rarely give like an actual target for calls that I share. But I gave a target on the Activision calls today, and it hit it perfectly. And that's where it topped out for the day. Well, at least after I shared that alert. Even I shared Roku calls, those went up 45%. If you're in premium, I shared QQQ calls in the morning that went up 130% very, very, very quickly. I even shared another QQQ call later in the day that went up 25%, and then some NVIDIA calls that failed. But pretty good start to the week for options overall. We'll talk about some of those trades in a little bit. Make sure to hit the like button, hit the subscribe button. Now let's talk about where we are. So we talked about this level last night. Okay, this was charted out. We had a gap fill over here and the 100-day moving average on the S&P 500. So we went down to a support. I even said in the Discord earlier today that this was a support area down at these levels. You had a small bounce off the lows. So you're testing this big make or break area for the S&P 500. Now you can see this red line is your 100-day moving average. The last time you were touching this 200-day moving average, you saw a 6% move up in 9 days. The time before that you almost touched it, you saw a 5% move up in 8 days. The time before that, you actually broke under it by about 1.5%. But then when you were able to reclaim it, you went up 10% in a month. We can go back in time. You can see over here as well. September of 2020, you had a 10% bounce in 2 weeks off of it. Same thing happened again in November of 2020. So you're testing your 100-day moving average. If 455 is given up on the S&P 500, that probably sends you back down to around 448 to 450-ish from these lows. So yeah, you're in this make or break area because you have your 100-day moving average, you have your gap fill bounce, but you did give up your demand line. So if we take this off the chart, you can see this white demand line from these lows and this low. You actually bounced off of it on the 10th, which was last Monday, I think. And today you were not able to bounce off the demand line. You actually broke under it and confirmed under it. So on the S&P 500, you broke down from your upsloping channel or rising wedge. On the NASDAQ, you also broke down from your upsloping wedge, which are these two white lines you see over here. So you do have an official breakdown on the S&P on the NASDAQ. Moving on to the NASDAQ, you also, for the first time since like April of 2020 during the COVID crash, for the first time you've closed under your 200-day moving average. That is a very, very big thing, okay? This is one of the only technicals that most institutions will be looking at. And this is the first time since our rally off of the COVID crash lows that we have closed under the 200-day moving average. This is the first time in almost 2 years, okay? Almost 2 years that we've closed under that moving average. That's not a good sign. So you're in this area where you are having some technical breakdowns for the overall stock market. This is not what you've been seeing. Okay, we've never done this on the dips we've had before. Now at the same time, you do have some potential scenarios that could change things around for the NASDAQ and the S&P, such as classic bullish divergence potentially on the daily. If you start bouncing, you have this falling wedge on the NASDAQ, which you can see with these green lines. And then on all the indices right now, you have one thing that's very, very interesting to me, which is your Bollinger Bands. You are at your lower Bollinger Bands on pretty much all of the indices. Okay, that's this lower red line. You can just zoom out and take a look at it. We're getting that same exact formation that we've been seeing, okay? How many times have I told you all that lower Bollinger Band and high volume has been a bottom, okay? We had it. I'm not going to do all the circles again like I usually do, but just look at the volume spikes and look at the lower Bollinger Bands. Every single time you've pretty much had this formation with very high volume on the SPY at your lower Bollinger Band, you've put in the bottom pretty much every single time. So we are showing that formation currently. And you also typically on your S&P 500 have about 3 to 5% pullbacks before bouncing back up in the last year or so. Over here we had a 6%, we bounced up. Over here we had a 5%, we bounced up. 5% bounced up. 4% bounced up. So you could see 3, 4, 5% pullbacks are what the S&P has been used to. I think the last time you had an official correction on the S&P was right around the elections in 2020. So this might have been it right here. Your last official correction took place in September of 2020. All right, every single dip since then has not really exceeded 5 or 6% for the S&P 500. Currently off of your high, you are down 5%. Okay, so historically over the course of the past year, when your S&P was at the lower Bollinger Band, had high volume, and you were down 3, 4, 5, 6% from your previous high you just put in, you found a bottom. The only difference now is you are doing that while breaking down from a channel. Typically we've been holding these channels. I can even go to the weekly to show you all this, right? You see this long-term green channel on the S&P. Typically you've held it and you've bounced off of it. Right now you're under the channel on the S&P on the weekly. You're under the channel on the NASDAQ on the weekly. Okay, these are channels you've held for over a year on a lot of these indices, or around a year. Even on the Russell 2000, you broke down from this rising wedge. On the ARK ETF, you're kind of in a falling wedge. This one's already been underperforming. So even on the QQQ, you broke down from this range you've been in since November on the weekly. So you're getting breakdowns. You are getting technical breakdowns. So we're just in this huge make or break area where we are getting technical breakdowns based on support, but we do have certain variables such as volume and Bollinger Bands and historical pullback percents that do potentially indicate a bottom, which means we have contradicting variables, which means you don't really have a strong edge, but what you do have is a make or break area, which means the next couple of days for the market, whether we bounce or whether we continue falling, will probably be your decision maker for the next month or so. All right, if you start bouncing off of these levels, off the lower Bollinger Band, off of your 5% pullback with the high volume, this could be a bottom where you run again to a new all-time high. If you don't do that and you continue to fall lower, then you're breaking the trend of support you've seen for the past year. You're not going to be using those signals that you have been seeing. So that's why the stream is titled Stock Market Crash or Bottom. That's why we're at a make or break area on the S&P 500 and the NASDAQ. So yeah, on the NASDAQ on the 4-hour, you're potentially retesting the PCZ of this bullish Gartley, roughly. But you also did close under the 14.5K support pretty much, 14.531 on the S&P 4-hour. You're barely hanging on to another domain line I have charted. So we're in these make or break areas. Moving on to the Russell 2000. You're at the bottom of the support range. All right, you could see if we zoom out over here, 208 was your low from March 25th. You closed a little bit under that. Now you could rally back above it. You also could eventually get classic bullish divergence. So you can just see we're at these make or break areas. You're testing a potential breakdown of the channel the Russell has been in since pretty much exactly a year ago. Currently, you're already kind of breaking down on the S&P and the NASDAQ. So we're really at a point where if we don't bounce within the next 2 days, you're probably going to see fall through to the downside. And this might just, I'm not going to say be the start, but you might see more selling. Remember, zoom out on your charts and see where we are. Okay. And I know Cheddar Freeze has been talking about the potential of this being a Wyckoff distribution range, which is the opposite of accumulation. Accumulation would be bullish, distribution would be bearish. So if you do confirm a breakdown at this level, that would be a breakdown of a very, very well-respected range for pretty much a year. Your ARK ETF did fall under the domain line of this channel, so you can see non-stop breakdowns across the board. The next level I see for the ARK ETF is a gap fill at 74 that we talked about last night. So yeah, you're just in this area where currently you're under supports. If you bounce in the next couple of days, you could reclaim those supports, but it has to happen first. I'm not trying to guess and predict and whatnot. I want to see it happen first before I turn bullish again on the market. So that's how I'm viewing the market currently. UQQ trying to hold some support over here from a previous resistance in August, and also was your low from last Monday. So that's really it for the market. The US 10-year has been rising yet again. It's approaching some resistance back from 2019. We could chart this as a little bit of a zone over here. So you have a resistance zone between 1.91 and 1.95 for the US 10-year. That's your resistance. You're probably going to test it at some point. You're very, very close to it. And that's another make or break area to keep an eye on. The VIX has put in its highest close since December 20th, it looks like. But now it's nearing the top of its range it's been in. So we're showing interesting areas. If the Russell breaks down from this range and the S&P continues down, that means that the VIX could break up from this range it's been in since April of last year. So keep an eye on all of that. The Hang Seng Index is up about 0.5%. Looks like gapped up a little bit. Just been kind of going sideways for the last week or so. Remember, we talked about how beautiful this looks on the weekly. We'll see if it actually plays out or not. You have confirmed classic bullish divergence. Gold kind of breaking out of this triangle on the weekly, still just going sideways. The dollar has bounced back up. So you had the break. This might be your hook. All right, you had a break. Now you're retesting your previous demand line as a supply line. You are showing a little bit of supply there for right now. We'll see if it can reclaim that demand line or not. You still have the potential for hidden bullish divergence on both oscillators for the dollar. The Dow Jones broke down from its upsloping channel it's been in. The Russell 1000 Growth ETF is breaking down from its channel, but it is testing the 200-day moving average now. The Russell 2000 Growth ETF, this was one of the first to actually really break down. So what you're seeing on the Russell 2000 Growth ETF, not the Russell 2000 Small Cap ETF, is what you could see if we break under this level on the IWM, okay? It's what you could see if you break under it. All right, this is how it looks for right now. And this is the 2000 Growth, not just the 2000. So you gotta hope that these next 2 days we can find some sort of support, get some sort of a bounce. We've had two straight weeks to red to start off this year. That's really what the market looks like for right now. Overall, we have to see what happens first. There's no point in trying to predict things and whatnot. I just gotta wait for more data. So that's my thoughts on the market. Other things that happened today: Activision up 26% today. Take a look at the headline. Let's see. Let me try and find a better headline for this. Microsoft will buy Activision Blizzard, betting $70 billion on the future of games. This is still not the article I wanted, really. Where does it say the share price? There we go. So Microsoft is paying $95 a share, roughly 45% above his company's stock price before the announcement. So I don't know, I'm not going to spend time trying to find the perfect article, but Activision, huge news today. It's gapped up a lot. You're wondering where this is from. This was a premium swing, alerted at $59, probably at some point in December. So yet again, another coincidence. And I'm not going to act like Activision was up 26% today because of technicals, but it's just really cool how many times we've seen something show bullish technicals, it starts bouncing up, and then a couple weeks later, some insanely good news comes out, or Wall Street Bet starts talking about it and it just goes insane. So, it just makes me think of things like BBIG. Remember when we talked about that? Long-term breakout down over here. It's up like 150% since we talked about the long-term breakout. IMEI repairs in the chat right now, who's actually one who asked about BBIG when I initially looked at it. So yeah, BBIG is going crazy. We'll come back to that. But Activision, boom, it's a 30% profit for premium members, but it gapped up this morning. So if any premium member just waited for the open, at the open, you were up 46% since the entry of the swing. So beautiful swing. And now Activision, it could have more room to go. The The low of the day was actually the 200-day moving average and this 81.61 level, which was a high from October, resistance in November of 2020, and resistance in July of 2018. So currently 81.61 is the support to watch in Activision, and I'd say the closest resistance was just today's high, around 87 bucks. So yeah, if you're a premium, even if you're not in premium, I shared this with all of you today. So I was scanning, I looked at Activision. There was a lot of call option activity on it because of the news. You put in this falling wedge breakout with a double bottom and hidden bullish divergence intraday. And in the Discord, on the Swing Alerts channel, which is available to everybody for free, I shared this Activision calls idea. They were the $80 strikes for this Friday. And this was the analysis, just what I told you over here. This is what it looked like at first. And I really don't typically give targets and stops for options because everybody has their own risk tolerance and trading style. This was just a very, very clear chart to me, very clear areas. So I did share them. And that first target, 83.49, it literally went from this price at 82.30 to 83.49, and that's where it topped out for the rest of the day. So at that first target, the calls were up 50%. So 50% there on Activision calls. You can see how perfectly I alerted it right around over here, and it perfectly tapped that first target where the calls were up 50%, and then it pulled back all the way back down to that previous support or previous resistance that it's trying to flip into a support going into tomorrow. So if it runs again tomorrow, the next level I'd be watching for resistance apart from this little area at 83.50 would be 84.60ish from this high over here, which is also near the golden retrace, and then again the high of day around 87, and then of course support for Activision tomorrow is around 81.40ish. You do not want to break under that because that would also be breaking under your 200-day moving average roughly. So that was Activision today. I guess we're just going to go over options first, but ROKU as well, I shared the breakout. It was right over here when I shared it. It was breaking out of this triangle, and I shared ROKU calls with all of you in the Discord. Make sure to join the Discord if you want these, okay? You don't even have to be in premium for these. I'm starting to share them with everybody now. Of course, I'm still sharing some, or probably the majority of them in premium, but I'm still trying to share some outside of premium now. And yeah, I shared ROKU calls, 170 strikes for this Friday. The current price was 166 then, and it went all the way up to 160 or 170 almost. So it made this nice move off the triangle breakout. We were also talking about this last night on stream. Go back to last night's stream. I told you all ROKU is one of the stocks I was watching going into this week, and it still doesn't even look like it's moved much. It just broke out of this falling wedge with classic bullish divergence. I mean, but have more room to go. It's kind of still developing this little triangle pattern here. We could chart it out in the 1 hour. So ROKU is still on watch for tomorrow. That is ROKU. Another nice option trade. We already kind of talked about the SPY one, so I'm not really going to recap that. And then for premium members, I shared some QQQ calls. Where did I share them in the morning? I think I shared QQQ calls like right here in the morning. 10:03 a.m. Okay, so pretty much right here on this candle which I'm circling, I shared QQQ calls with premium members. It was a break over the VWAP, a double bottom, a bullish hammer, a couple other things. I probably shared the analysis here. Yeah, so I was watching this little triangle on the 5-minute. I was watching a 1 hour support, and literally on the next 5-minute candle, the QQQ went up almost 0.5%. So the calls went up 130% within the next 10 minutes for premium members. So that was like, this was the first option I shared this whole entire week. It was also my first trade of the week. So yeah, very nice, quick, easy, too easy of a trade, honestly. And I put in its high over here, and then it developed this falling wedge throughout the rest of the day, had a nice little move in the afternoon, and then it sold off into the close. I even shared other QQQ calls. Where was that? I shared other QQQ calls at 141 towards the bottom of this wedge. So this move was also played for premium members today. But yeah, I mean, the market, S&P is down 5% in 2022 currently. And I mean, potential profits this year are already over 1,000% for premium members and options ideas. I mean, this was last week's potential returns. So yeah, you know, the swings aren't doing too well. The market's not doing too well, but I'm still able to find these winning trades and options, knock on wood. So hopefully I can keep finding them. But yeah, we're just banking on the options for right now, which is honestly, it's kind of been like that for the last few months. we did have a nice couple of weeks of swings towards the end of December. But yeah, those were some of the options from today. I also shared some NVIDIA calls. Those just didn't work out. They just broke support later on in the day. But speaking of NVIDIA, it's still kind of in this potential bull flag with divergence, retesting lows from last week. We'll see what happens. So apart from that, SOFI had a very sharp move after hours on some news. It closed after hours up 17% at $14.07. Showing you. So SOFI stock soars after clearing final regulatory hurdle to become a bank. Okay. SOFI got approval from its 2 key regulators to become a bank holding company. I'm not too good with any banking stuff, but that's big. SOFI is tapping into a lot of different spaces of finance. I don't know too much about the company, but for what I've seen, I like what they're doing. We'll see. You know, from a technical standpoint, currently, it's in a very interesting area. So it's at 1407. We'll come back to that in a second. Nerve with the $21. How you doing? Thank you very, very much, Nerve. At day one, I say it like every time, but I really appreciate the day ones in the stream. Let's get some. Let me see if I can pop it up. Let's get some vibes in the chat for Nerve with the $21 tip. Thank you very much. Hope you're doing well, Nerve. Also, thank you for the tweet you sent earlier today. Hope I don't embarrass you, but I'll read it out right now. Let's get some vibes in the chat. Nerve on Twitter said, I am still in amazement. That last SPY option trade felt like a boxing match, but with Champ, FTM Discord, Premium, and putting time in, I came out with 86% profit. I believe that's the 300% runner from Friday. So yeah, that was a nice trade, but hope you're doing well, Nerve. Thank you again for the tip. But yeah, SOFI, I mean, again, it's at 14 right now, so you don't see, this is only market hours data currently on my screen. So it went up to over here after hours. So this, you know, coming up to these areas after hours means it could be breaking out of this falling wedge. And you also, since it's up 16-17% after hours, if it were to open like that tomorrow morning, your MACD would probably get either, it would probably go green or close to green. So you get the classic bullish divergence, the wedge breakout, but you would be retesting your previous support zone as probably a resistance zone, unless you just gapped above it or something. But yeah, that catalyst could definitely help out the technicals, but you still have to get back above like $15 for it to be back above support. So that's SOFI. I found this chart today. There was some call sweepers coming in for Farfetch. Potential classic bullish divergence, retesting previous resistance as potential support, close to a bullish bat. It's okay. I think this chart needs a lot of work. Just wanted to share it on stream. Another one I'm watching is Boeing. This one's had some interesting options activity. It's testing a breakout of the channel and a 200-day moving average. And BBIG is up about 150% since we talked about the falling wedge breakout. I charted all the levels for all of you last night on stream. After hours, it went up to pretty much around $6, and it closed at 578. So let's go back to the daily. Have some resistance at around 585. You have a gap fill at 585. So that gap is not technically filled until you fill it during market hours. Gap fills, in my opinion, don't really count during extended hours. So yeah, still got to fill that gap. We'll see what that acts as tomorrow, support or resistance. And now you have maybe some support around the lower $4 area. You have your 200-day moving average, a gap fill, and a historical level. These are all your levels on BBIG. So that's what's going on there. Obviously, a lot of chatter with it going crazy in the last few days. And that's pretty much it from what I wanted to talk about, apart from the swings tonight. XOP is another one. A lot of call option activity on this one today. It's testing a huge make or break area. This is a spider. Our S&P oil and product, I don't know. So it's testing this 112.62 level. You can see the lows over here, the highs over here, the highs over here. It's a big make or break area for this. And yeah, what else? Fisker sold off more today, unfortunately. Didn't really do much off the PCZ of the bat. Now it's kind of at a 94, 93% retrace. It still could be in this area of a potential reversal, but you did close under 1450-ish, that major historical area, unfortunately. So your next support's around 1350-ish now for Fisker, unless you can reclaim 1450. Palantir's at the domain line of a wedge with potential triple classic bullish divergence, but not much historical support here. CLOV stopped out today. Just can't really do much, you know, when these stocks are dropping nonstop. You know, we had amazing swings from, like, I'd say September, October of 2020 to, I mean, honestly, up until like Q3 of 2021, and then Q3, Q4, it's just most of these mid caps and small caps are down like halfway from their highs. They're down like 30, 40, 50, 60, 70%. In CLOV's case, from its high, it is down 90%. So it's pretty tough to swing a stock that's down 90% from the high that I put in not even a year ago. So I try my best, but the overall selling pressure has just been too immense on a lot of these stocks for the last few months, unfortunately. So right now for CLOV, you just had your lowest close ever. Potential hidden bearish divergence implies a continuation to the downside if it does confirm. I would just at this point focus on psychological levels, probably 50-cent increments, $2.50, $3, $3.50, $4, $4.50, etc. That's probably how I look at things. But of course, you know, if you ever do reclaim this wedge, which you easily could if the market starts not falling every day, you eventually could break out of this falling wedge, and we all know what the textbook targets of a falling wedge are. 50 to 618 retrace, which would take you up to $8 to $10. But you have a lot of work to do then, and you definitely need the market to help you out, and you probably need a lot of good catalysts along the way. So let's not even talk about that for right now. So yeah, those are all like the tickers I wanted to talk about before we talk about the swings. For the swings, most of them were down today. Tesla was down 2%. Yeah, swings are taking a beating, right? So we're just in a situation where most of the swings aren't doing well, but that's why I'm focusing on day trades, on options trades, on trying to pick apart the market however I can, apart from just holding stocks that just aren't going up, unfortunately, broadly as a sector. But Tesla, it still has the potential of this inverse head and shoulders. It just has to get back above this green supply line. That's not the neckline. This green line is not the neckline of the inverse head and shoulders. This red line is the neckline. But this is another important supply line you want to get back above. Tesla, you'd like to see it back above probably 1070. On the 1 hour, it's kind of in this little triangle pattern. And yeah, that's it for Tesla. Beyond, still maybe just back testing this wedge. I mean, it's continuing to at least find support off the previous supply line. Hopefully it can bounce off of that. SONO, this is now down to 83% retrace, kind of an unofficial harmonic here, but you need it to get back above 28 for it to reclaim support. So you're just kind of hanging on by a thread in a lot of these. JD is holding up. This one's up 6%. Just kind of in this little range for the past few days between 71 and 75. Hopefully breaks over 75 before breaking under 71. AMC got stop hunted today, but did not close at or under the stop, but it did close under the demand line of this wedge. So I don't know, maybe you could redraw the wedge to look like this. Whatever, I don't know how much that really matters, but AMC, you'd probably just want to see us get back above 21 and hold above 21. That's a very important level. SPLK is up like 1% since the entry. Currently, at one point, it was up 6%. This one still looks okay to me. I don't think much has changed from a technical standpoint. We'll see what happens. SU, hopefully can move up towards the third target. There's no resistance until then. The swing's already up 17% since the entry, and then VO broke out of the inverse head and shoulders. It's currently up 21% since the entry, and there's not much resistance until the third target. So that's really it for the swings currently. I know it's a little bit of a boring time for swings and whatnot, but you could be creating potential. Even if we do go lower in the markets and we break down from these levels, that could create even more potential, right? The lower you go, the more room you could have to the upside eventually. It's just a thing about timing, and you can try and time things as much as you want. Technicals can definitely help with that, but you also have to allow yourself room for error. So yeah, make sure to hit the like button, hit the subscribe button. Let me read the chat for a second here, and we'll do some ticker requests. I know we didn't do any last night. The Waffle Maker says, with most of us being so young, we should welcome a major pullback. Better for us to accumulate then. I could see that going both ways. You know, there's a lot of people who do have long-term accounts, retirement accounts that are down 40%, 50% from their highs. At the same time, yes, it would be nice to see Apple at 120 again. It would be nice to see a lot of these stocks at lower levels. But really, I can only think of large caps off the top of my head that I'd like to see at much lower levels. For a lot of these small caps, mid caps, I'd want them to start going back up, honestly. They've already gone down to levels which I probably would have never predicted 6-7 months ago. And I'm sure a lot of people agree with me on that, but I definitely get what you're saying. It just depends on how you're playing things. Better Freeze had a nice Activision put play this morning. That's good. Yeah, Beyond's been back testing for a while, Mehdi. I don't know, just not a lot of volume or buying pressure right now. Growth stocks 2022, a little bit of a vague question there, but honestly, I think honestly where we're at currently, I feel that a lot of these stocks that are down 50, 60, 70% from their highs are not financial advice, and I'm not saying any specific stocks because I'm going to say one that continues dropping and everybody's going to get mad, or one person's going to get mad, not everybody, but I'm just saying a lot of these stocks I think are insanely undervalued. I don't really want to quote Kathy Wood here, but I do think a lot of these stocks are in deep value territory, and they're just not, their current prices do not replicate the growth of their business within the last couple of years, even during a pandemic. So I think right where we are right now could be more of a situation where I personally have a lot of interest in looking at small caps and mid caps for long term. And I'm not saying every small cap and mid cap, I'm saying specific companies, okay? Specific companies I think are currently at areas where you could get 3, 4, 5, 6, 7x within the next decade on just by getting in around these areas and holding for a while, because they're really, really undervalued. They're just getting rug pulled all together. But you can't just blindly go and get every single small cap and mid cap. A lot of them probably will not go back up for a long time because they did break down from their key levels, and they also were part of a large bubble in a sense. So if you can find the true gems that shouldn't have sold off and really only sold off because of the overall small cap and mid cap sectors taking a dive, I think that's a little bit of opportunity, right? A lot of opportunity right there. So that's how I'm looking at things, but do your own research, pick your own stocks. I'm just saying, I mean, I'll say one stock FSR I don't think should be at 14 within the next 4 years. Okay, but again, I don't know the future. It's possible it is. Anything can happen. The whole entire, I was gonna say something horrible, but I'm not gonna say it. I was gonna say the whole entire economy could collapse, but I don't even want to put that into fruition. I was just saying, you never know. An asteroid could hit the earth tomorrow. You just have to be prepared for any situation. That's all I'm saying. But that's a very low probability, and I hope it doesn't happen. It was just, I don't know, I was just thinking of the worst possible scenario, because that's how I look at stocks. That anything is truly possible, whether good or bad. But of course, I like to stick to probability. All right, so what about CLOV? I think CLOV too. I don't think CLOV is going to be at $3 in a few years. CLOV was at $28 not even a year ago. It's currently at $3. I do not think that anything fundamentally changed for the stock to drop from 28 to 3, maybe 28 to 5, maybe 28 to 7, 28 to 8. Of course, 28 was too high for where CLOV currently is as a company. 3 is, in my opinion, too low. But again, it's not only about what the company is, what the technicals look like, it's about sentiment, okay? At the end of the day, the only thing moving these stocks are not the stock's technicals, not the stock's fundamentals, but the people buying and selling them based on their emotions, okay? That's what moves stocks. I don't care what anybody else says. Yes, news will move them in a sense. Technicals will move them in a sense because you're using the past to find probability for the future. But it's the emotions of how people react to the news, how the emotions of people how are reacting to those technicals that actually move the stocks, the buying and the selling, okay? There's many different parts to it, but of course they all intersect in their own ways. What's up, TM? And yeah, earnings. We're coming up on a huge earnings season. I think this, once again, we're in a time where earnings for a lot of these stocks will actually matter. And we might see some insane earnings moves for companies that are down 50% since their last earnings for no reason except for the fact that the IWM, not even the IWM, but just a lot of small caps and mid caps dropped so much, but the companies actually grew between Q4 and Q1 or Q3 and Q4. So I don't know, we'll see. All right, so let's do taker requests now. If you want me to look at a taker, drop it in the chat. I'm gonna pick and choose some. I'm not gonna look at all of them. But yeah, those are just some of my thoughts for right now, not financial advice. Hit the like button if you didn't already, hit the subscribe button, and let's look at some other charts. MULN. These are your big levels. Apart from that, there's not much I can really do. You could probably draw a demand line like this. I mean, it's like an extreme falling wedge, kind of, but the touches are not super clear on this one. So it's not super clear. Your levels, Stephen Madden, classic bullish divergence potentially. That. Ignore this little move higher, downsloping wedge channel, however you want to look at it. There's a few different ways you could draw those lines. Some levels. Yeah, those are probably the larger levels I'd be focusing on for right now. The ROG. What's up, Florida Nick? Analysts believe the earnings for this year are expected to be moderate, says Cheddar Freeze. It's approaching some support at 147 from your low on August 19th. We'll see if it can bounce off of that. If not, the next support I see is around 124, and then there's not much resistance up until around $2. I've not looked at UWMC in a long time. It's retesting its all-time lows around mid $5 level. I don't see much of a pattern here. I'm not sure if there's any pieces at this area. Large, but I just want to see what this looks like. I'd probably just look at it like this. Levels. That's really all you can do in a lot of these stocks right now until they start developing some higher highs and higher lows. American Airlines. Nobody put that in the chat, but I just want to talk about this one. I was watching it, 1840-ish was a support. See it from this low, these lows, and then today in the morning, unfortunately, gave it up. So for puts, maybe if Boeing, they don't move super. I mean, I'm not going to even act like they move similarly because yes, they're in similar areas of the market, but you can see American Airlines has been in this downsloping channel or wedge, while Boeing's been in this upsloping formation recently, but long term it's in the downsloping as well. But American Airlines, if it can't confirm back above 18, maybe it could make a move back down to these levels, which maybe be puts, but financial advice. Just it broke down from a major level. You see from this high, this high, this high, these lows. So just as we talk about stocks breaking up, this was a breakdown today. Pay attention to. CEN, this is kind of like a bear flag, but you can hold above 94, it's okay. Just gotta hold above 94. It's your support zone that you really want to stay above. So even if this does break down, you just want to drop into the support zone and probably bounce off of it. And if it goes up, then these are your resistances. Side. Pfizer. Pulling back, there is a gap to fill. 52, 53, 53.85. Sorry, 52.85. There's also a high from over here and a gap fill. I think it probably would fill that before going a lot higher. Never know, but I maybe wait for that. Maybe at that point, we develop classic bullish divergence. So, MACD. But eventually, if it does break out of this flag or wedge, it would run back up. Have a good one, Cheddar Freeze. FUBO. Not much to do here for it. 1434, 1450, that's the important level to get back above. Until then, there's not much. I don't really want to focus too much on how weird the chart looks. So, I just like to see it get back above 1434. So that's FUBO. Futures are flat for the most part. Bitcoin is bouncing up a little bit. And I guess that'll be it for tonight. So, all right, we'll do one more. We'll do Tattooed Chef. For Med. Go to larger time frames.
You're just too good to be true.
I'd probably focus on 14. I mean, I don't know. The thing is, like, you could call this a support zone right over here, but then you could also call this a support zone, so it's a little bit hard to determine what exactly is a support zone here. So many different ones you could kind of take this one. One thing I don't like about Tattooed Chef is that dropping into these support levels, it's consistently made lower highs for the most part. But I don't know. I mean, I think I'd probably focus more on fundamentals than technicals right now on Tattooed. MJ, it's just going down and down and down. I'd probably wait for higher lows and higher highs. You are in a historical support area around the PCZ of a bullish bat. I mean, you have things going for you, but it could take some time. These historically last 2-3 times you were here were, I mean, the only times you were here, you bounced up a lot. So the only question is, can you bounce from here, or will you go down to 850 and then bounce, or will you break this zone for the first time in history? Because a lot of stocks have broken their lows for the first times ever in the last few months. So I don't know. You have variables, but I probably wait for higher lows and higher highs. So that's going to be it for tonight. Timestamps should be up within an hour. Hit the like button, hit the subscribe button. I'll be live again tomorrow. Join the Discord. The link's in the description. Check out the other links in the description. Premium prices will most likely be raising next week. Maybe the week after. I'm not too sure. So get in. I'm telling you, get in now. This is going to be the final price raise for a while, but we've pretty much done one every other month for like the past 6 months. But this month will probably be the final price raise for at least 4 or 5 months. I don't know. I'm not promising anything, but this is the time to get in if you want to get in. There's so much there. If you want to find out what's there, it's the first link in the description. Everything will be available to you. There's testimonials, there's a walkthrough video, there's the results. Whatever you want to know before you join, you can find out. If you don't see it on the website, you can always DM me on Twitter at Champion Vibe or in the Discord. Just make sure you're not DMing a fake Champion Vibe, because there's a lot of people out there doing weird stuff. There's so many scams lately. Just make sure you're looking at the Discord numbers next to my name. Make sure you're looking at the follower account next to my Twitter name. Don't get scammed, alright? If you're going to DM me, make sure it's actually me. Alright, so unless anybody has any other takers to look at, we might call it here. I don't know. I could stick around, but I'm just not seeing much to talk about for right now. We gotta get another new segment in the stream. It's so many charts to look at, right? So yeah, I'll be live again tomorrow. Have a good night.